Be Wealthy and Smart, episode 803.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, is currency devaluation coming? Because I like to keep an eye on what the wealthiest of the wealthy are doing. And today we're going to talk about John Malone. John is the chairman of Liberty Media, which is a cable empire where he built TCI in the 1970s before selling it to AT&T in 1999 for roughly $50 billion. Since that time, John Malone has become the largest landowner in the United States and owns land about the size of the state of Maine, and is very involved in timber, multifamily housing, and irrigated farms. But it's what he's doing recently and what he said on CNBC today that really caught my attention. So I'm going to share an article with you from CNBC in which John Malone says he's buying hard assets like housing in a bet on currency devaluation. And it says, Liberty Media chairman John Malone told CNBC that hard assets look attractive as the unprecedented coronavirus stimulus is poised to lead to a depreciation in currencies. We've survived this pandemic because of enormous fiscal and monetary stimulus, Malone said in an interview that aired Thursday with Squawk on the Street co-host David Faber. And I've got to believe this will lead to devaluation of currencies, that hard assets will increase in value in currency terms. I'm not sure I'm going to call this inflation, but it'll look a lot like it and feel like inflation. To support the economy through the pandemic, the Federal Reserve slashed interest rates to near zero and vowed to keep buying assets under its quantitative easing measures. Lawmakers passed a historic $2 trillion coronavirus relief deal in March that provided Americans with stimulus checks and other aid measures. I think we're seeing it in housing, this unrealistically low interest rate environment, which has been necessary now in order to avoid worse problems, Malone said. It's hard for me to believe that it won't be followed by a period of currency devaluation. Malone believes the massive amount of stimulus will lower currency's value, making hard assets such as real estate and commodities more appealing. The DXY US dollar currency index has fallen more than 10% from a March high. So I just want to pause there and say we did do the podcast about Goldman Sachs talking about hard assets next year and currencies being up 15%. That was their forecast for 2021. We also have talked about the cycle for commodities being at a 30-year low. So we're seeing commodities being very undervalued right now and stocks being historically overvalued. And about every 30 years, these switch places where commodities start their trend upward and stocks tend to either move lower or move sideways. But one of the reasons that we are enthusiastic about gold, silver, precious metals, mining stocks is for this possible currency devaluation to come in the future. Because oftentimes overprinting of money, or quantitative easing, if you will, which really started back in 2008 and was never solved, and then started up again this year, is just the extension of the same problem, which is debt creation by the government. Debt never gets resolved by creating more debt. In fact, that just makes the problem worse. Anytime you increase the supply of something, it generally becomes worth less. So increasing money and creating more money is a way that could potentially make the dollar lose value, which is what Mr. Malone is saying. The article goes on to say, I've been trying to invest or diversify into hard assets, Malone said. You know, I think things I bought this last year, I've bought substantial interests in multifamily housing, primarily in the U.S. Record low mortgage rates are boosting the demand for home buying. Sales of newly built homes jumped to the highest level in 14 years in August amid the stay-at-home culture of the coronavirus pandemic. Malone said he's also getting into assets like farmland. I've bought irrigated farms because commodities were cheap and farms were at a low cycle in value. And I'd always wanted to have some irrigated farming, so now I'm growing potatoes, he said. End of article. Well, isn't that interesting? My other favorite billionaire, who is investor Jim Rogers, has always said that farms will be the next wealth-building opportunity and that young people should forget going to college and become farmers because they are going to be the wealthiest people. And speaking of potatoes, there's billionaire J.R. Simplot, who is the potato supplier for all of McDonald's French fries. So there's money in agriculture, there's money in land, there's money in multifamily housing, and there's money in hard assets such as precious metals, gold, silver, platinum, etc. All of these things are looking like a very opportunistic buy right now as commodities come into the low part of their cycle and are very undervalued compared to a lot of intangible assets that are extremely overvalued. In fact, we saw an article today that 90% of all assets right now are intangible assets. That sounds like it's a little bit out of whack toward the intangible side, which means a lot of paper assets, such as bonds and debt, mortgages, etc., are where the overvaluation could be, and hard assets could be the next opportunity for investing with a little bit of a kicker of a possible dollar devaluation, giving it some tailwind. I will post a link to the article in the show notes so you can check it out and click through some of the attached links in this CNBC article that was written by Yoon Lee. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.